Hi everyone, it's Grant Abbott speaking, and welcome to our quick pop-up webinar session. And we're getting a lot of, obviously a lot of traction through Lightyear Docs into that succession, asset protection and estate planning space, as well as SMSFs. All our documents and pensions, SMSF wills, BDBNs, the whole range of, you'll see a little bit later on, the SMSF establishments. They're all brand new documents that I've drafted in the last couple of years following my leaving Now Infinity. So with that one, I wanted to just take you through some areas, because we continually get a number of accountants coming to us and saying, look, I gave up self-managed super funds for quite some period of time, and really, you know, I've had a chat with dealer groups, or ASIC fees are getting expensive, so that this idea of advising on self-managed super funds is sort of being put to the wayside, which is extremely unfortunate. You can actually see, although the assets are, and this is amazing, $820 billion are now sitting inside self-managed superannuation funds. But importantly, from that particular perspective, it's quite interesting to see that the numbers of funds are dropping down. With the 6-member funds, obviously, we can start to bring the next generation in, which is absolutely crucial for incapacity and estate planning. But at its basic core, self-managed super funds are, first off, one of the best asset protection mechanisms in Australia, completely. Secondly, in terms of estate planning, they've got the ability, if you direct everything out of the self-managed super fund, including a testamentary trust being built by the trustee of a self-managed superannuation fund, it sits outside the Family Provisions Act of each state, maybe not so much New South Wales. Plus, of course, it's got fantastic tax concessions. There are limits on what we can put in by way of related party loans, contributions, concessional, non-concessional. But there's a huge opportunity. If you think about our caps of 1.6 million, if you've got 6 members in the fund there, that's a quick, obviously quite a sizable fund. More importantly, the rule against perpetuities doesn't apply. So once you set these things up, they go forever until they're wound up. Now, the issue that many of us faced is that SMSFs have been warned off doing SMSF advice, both accountants and tax agents, which is quite strange, because in 2018, and I'm going to direct you straight towards that, this isn't me speaking, I want to give you the actual truth that's been hidden from all of us for quite some period of time. 2018, 3 years ago, ASIC released quite a detailed exemption for accountants. Now, here again, exemption for accountants in providing SMSF advice and services to SMSF trustees and by the counterpart members. Now, this is quite a radical document. You'll find when you get the link later on today for this recording, you'll also get that info guide as well from ASIC, which is pretty important. So what I want to do is take you through the background on the Corporations Act. I want to then take you through, more importantly, the ASIC guidelines. And then I want to go through the next steps of how to protect yourself. And really what we need to do is, if we can find out where the tram lines are in terms of ASIC providing those exemptions for accountants, then we want to start to work in there. Importantly, in 2001, the Financial Services Reform Act came into play, and that was in Chapter 7 of the Corporations Act. So if you go in there now, you'll find that Chapter 7 is the precursor, was the Financial Service Reform Act. I made numerous submissions at that point in time when FSRA came out. In fact, I did the guide to the Financial Services Reform Act. If anyone's really keen on that, I can send you a PDF. But really, it heralded in a brand new area of financial advice reforms. For accountants, essentially, you were basically exempt up until that point in time. Now, what happened is that after that time, and look, I'm not sure whether it's design or otherwise, that they imbued the typical financial product is where you give money to someone else and they then go and invest it on your behalf. Now, quite rightly, they obviously brought into the game superannuation funds, because traditionally a retail or industry fund you'll give your money to a faceless fund manager or trustee, and then they go invest on your behalf. So it seems that all the counterbalances, the regulatory guides, the PDS requirements, everything like that, essentially should apply to retail industry superannuation funds. But the way they did it is they essentially provided that a financial product, apart from that general giving money to someone else who's going to invest on your behalf, there's also a whole lot of deeming rules, which we'll look at a little bit later on. And they deemed any superannuation interest, not under the Corporations Act, but under the SIS Act, that any superannuation interest under the SIS Act was automatically included in the Corporations Act. And I want to go through that a little bit later on, but that had the immediate snafu, bring in self-managed super funds, which I think just doesn't make sense, because at the end of the day, all members, unless you've got EPOA, all members are trustees, so they're all inherently involved in the decision making. There are no faceless people inside a self-managed super fund. It just doesn't work that way. So look, right from the start, I'm anti-SMSF inside Corporations Act. I just don't believe it's necessary or it's required. Certainly in terms of transferring contributions over from one fund to another, absolutely, I think that's required. But you're going to go down and see when we get into these ASIC guidelines that essentially that there are a lot of exemptions around there for us if we do the right thing. So again, there's exemption for accountants that lasted for a period of time. Up to 2016, we had that limited license. But you'll see as we go down the track, I think those limited licenses are really done their day. Importantly, if you are a limited license accountant at the moment, understand all these exemptions that I'm talking about do not apply to you. Again, I just want to reiterate, if you're a licensed accountant, and that's the exempt license for accountants dealing with self-managed super funds, all the exemptions I'm about to discuss do not apply to you. How do I know that? Because it's in the ASIC guideline. So what I want to do is we're going to go through a whole range of issues. I want to look at the keys to SMSF advice for accountants and tax agents. Obviously not going to deal with financial planners or licensed accountants, because both of you are automatically caught in there. So the key areas we want to do is, what is an SMSF financial product? So we have an understanding. And SMSF in itself is not a financial product. So that's the first thing. Secondly, we want to know the law. We're going to look at the ASIC guidelines. So again, this is not me going a deep dive in the law and saying this is my interpretation, because again, what we want to do is get to the truth. And I always look at, if you're playing a game, then the regulator is on the other side of the equation. So if we can fit within, remember those tram lines of ASIC, the same way if we're doing a private binding ruling, if we can fit in with other private binding rulings that the Commissioner offers, then we're in a best position. And again, you've heard me before when I talk about family allowance agreements, financial dependency. I don't go and talk about it from my perspective. I use cases and also private binding rulings, because we get a hint of what the regulator's thinking, which is important. I want to take you from there, from the ASIC guidelines, and then go in and have a look at how to establish a self-managed super fund within those tram lines, because we've adjusted our product, our SMSF establishment products to meet those ASIC guidelines. I want to take you through exactly what's required and how we've done it. What to do if you're a limited license, that's going to be issue, and where to from here. So I want to do this as a pretty quick one, like hopefully get around 30 minutes or so. So let's go through section 764 CA, talks about financial products. I gave that in the open there. From an SMSF perspective, section 764A1G provides that a superannuation interest within the meaning of the SIS Act is a financial product. As I said before, it's very doubtful, extremely doubtful, that a transfer of monies into a self-managed super fund by and of itself would be a financial product under the general terms, mainly because you're not giving money to someone else to invest on their behalf, unless you start to, you can get to an esoteric argument about the trustees, but that seems to go against section 17A, which says all members must be trustees. So everyone's got a hand in that decision-making process. Again, I'm anti-SMSFs being inside the Corporations Act. So this is really bizarre. Instead of defining what a financial product is or a financial product under the SIS Act, instead of going to say what a superannuation interest, it would have been better to define within the Corporations Act and the Corporations Regulations, because you could have judged it in and out over a period of time. So when we have a look at Section 10(1) of the SIS Act, because I've now got to jump over to the SIS Act, the definition of a superannuation interest means a beneficial interest in a regulated superannuation fund. So again, a beneficial interest that a member has, and we have to understand, and this is important, that the Corporations Act in this regard, particularly Part 7, and I could give you sections 760A, which is the opening preamble of the Corporations Act Part 7, says this is consumer-based legislation. So essentially, we're looking at members. Hence why when we're starting to do investment strategies, and you'll see this a bit later on, for trustees of self-managed super funds, provided we do not give specific advice on what investments they have, we're giving advice to the trustee. And again, the trustee is a consumer of investment products. Doing an investment strategy is not a financial product. So again, let me say that. An investment strategy is not a financial product. So whether you're a financial planner, whether you're a licensed accountant or you're an unlicensed accountant relying on exemptions, an investment strategy is not a financial product. With the exception, and I'll go and show you a little bit later on, with the exception if you then go and do investments directly. So what we need to do is, what is a financial product? SMSF is not a financial product. It's a basket potentially of iterations or relationships between the member and the trustee of that self-managed superannuation fund. So we look at the touch points there from the member, and each of those touch points potentially is a financial product. So for example, when I contribute into a self-managed superannuation fund, that's a touch point. When I become a member of a superannuation fund, again, that's creating a superannuation interest. So that in itself is a financial product. Making a contribution is a financial product. Taking a lump sum from the fund is a financial product. Commencing a pension is a financial product. Rolling over between funds into a self-managed super fund is a financial product. BDBN, not quite sure on that one, because it's really a contingent entitlement going down the track. It's not as if we're dealing with our financial product, our superannuation interest at that time. So I'm going to leave BDBNs out there with a bit of a question mark. So let's go through some of the core ASIC guidelines, and I've extracted some for you. I'm going to show you what it looks like in a second. But for licensed accountants, you can't take advantage of these licensing exemptions. For accountants, as I said before, investment strategies are okay. They're not advised to consumers. They're advised to trustees. Just keep away from the investment side. You're going to see when we get into the nitty-gritty of the asset guideline, they can actually do asset allocation for members of a fund as an accountant and will not be caught in the licensing. So you could say, for example, you could suggest to a client, well, the market's a bit toppy at the moment. You should probably go into property. You should go into this or that. I wouldn't go down that track. Again, just get a data capture or data collection from your client about what they basically want, and then insert that into the investment strategy. Setting up a self-managed superannuation fund, we're going to have a look at essentially if a client comes to you, then you've got a process now to not need a license to set up a self-managed super fund for them. And that's what we really go. You can't go out, put ads in paper, Facebook groups and say, look, I'm an accountant and I suggest everyone sets up a self-managed superannuation fund. Now, that's a more general advice. So what we need to do is we need to work out what that exemption is. For tax agents, you're actually probably in the best position there. So anyone who's a tax agent, and that's tax practitioner board. So even for financial planners, if you're just with a TPB, you'd be okay. But because you're a financial planner, you're licensed under someone else, you're actually caught. And though I do understand that a lot more planners are actually going out getting their own license, which is I think is a smart idea. So with both lawyers and tax agents, they're both exempt. So when I go out and talk about self-managed super funds, because I'm a specialist SMSF consultant, with, you can see Abbott-Family, there you go, over that shoulder, Abbott-Family lawyers, I'm protected in that regard. If I do an advice letter, again, we sign it off under Abbott-Family. The same thing with tax agents. You can write a letter of advice around the tax consequences dealing with self-managed super funds or pensions or lump sums, structuring, etc. And provided it's in the ordinary course of business as being a tax agent, you are exempt from the Corporations Act. So again, let me say that. Lawyers, if you provide advice in the ordinary course of your legal business, you are exempt from the Corporations Act. So you can talk about SMSF, you can talk about pensions, lump sum, so on. Likewise, with tax agents, if you are talking about SMSFs in the ordinary course of your business as a tax agent providing tax advice, then you are also exempt. So these are rules. Section 765B deals with these and provides specific exemptions for tax agents and lawyers. Not accountants, we're going to look at those different. So if you're a tax agent, we're going to go through. I'm going to show a little bit further forward. SMSF advisors and administrators, you just got to be really careful. If you're not a tax agent, you're not an accountant, you haven't got a license, just be very careful. You can't make a recommendation, because essentially at the end of the day, a financial product where you're caught giving financial product advice is you're making a recommendation or statement of opinion, a recommendation or a statement of opinion to set up a product. So you can't say to, if you're an administrator, oh gosh, you've got a lot of money in accumulation, you should use that and go and set up a pension. So if you did that, you're obviously going to be caught. Tax agent should be, well, look, there's on the self-managed super fund side, we can have a pension side of things. On the pension side of things, it's very tax effective. There's no tax if we set it up properly within there. So you can't tell a client how much to transfer from an accumulation to the pension side, but you can certainly tell them all the tax nuances around the benefits of having your money sitting inside the pension. In fact, you can do a spreadsheet saying if you put this amount over, this amount over, this amount over, this is what the rates of return, this is how much you'll be paying on the accumulation, this is how much you'll be paying on the pension. Importantly, if you're not caught under the licensing regime, you do not need to do a statement of advice. And everyone has had to do that. They're very painful. You don't need to do a statement of advice. But I'd still go down the track and give a letter of advice for most clients anyway. So let's move on. So this is, I've taken this, I'll just jump out of here so you understand that Grant's not telling big porky pies, it's the truth. So if I go here, you'll be getting this anyway from us today. You can see here, this is straight off the ASIC website. It's AFS licensing requirements for accountants who provide SMSF services. You'll see at the end of this element, it's last updated on the 30th of March 2021, but this information sheet 216, info 216, was last updated on the 26th of April 2018, so it's 3 years old. And look, I'm not sure if many of you have actually seen that. Put it in the chat room. Have you actually seen this? Were you aware of this? For those of you licensed accountants, did your licensing body talk about that? So they go through a preamble, how the AFS licensing regime applies to SMSF services provided by accountants. We then go down through a lot of that. The limited license regime, they go through those issues. So we go through all that. Borrowing through a self-managed super fund, just to let you know, borrowing is not necessarily, if you're doing margin lending, that's a credit issue. But if you're doing borrowing, that is not a financial product to get into a property. So here we go. Exemptions. So this will just give you an idea that it's not me talking about. What I'm doing here is I'll just highlight this. This is the ASIC guideline, exemptions for certain services. So we go down there, they talk about the a range of exemptions still continue after the 1st of July 2016, when the limited licensing came in. So importantly, under these exemptions, you can provide some types of financial services without being covered by an AFS license. See Table 1, SMSF services, the financial services regime for some of these exemptions. It's important to understand which types of conduct fall with an exemption which require a license. So we've got the traditional accounting services, financial product advice. So basically you want to stick away from that one, and then exempt services as well. So exemptions that apply for SMSF services. So if we have a look there, a couple of things. First, establishing, operating, structuring, or valuing an SMSF, including advice, assistance on administrative and operational issues, the process of winding up or exiting an SMSF. So that is exempt under Regulation 71295. That's not SIS regulation, that's corporations regulation. Again, I'm just reading this from ASIC, so it's not me, it's not my view. This is the ASIC's truth around self-managed super fund. You may provide advice on establishing, operating, structuring, or valuing an SMSF as long as you give your client the appropriate warnings. This includes advice provided for the sole purpose of, and surely purpose of, and only to the extent reasonably ensuring compliance with the legislation, advice on the process of winding up or exiting an SMSF. Now, this is important. You may not recommend that your client acquires or disposes of an interest in a self-managed super fund. So you've got to be proactive. We'll have a look at the tax stuff a little bit later on. So we'll go down that one. So it's a specific exemption that still resides in there. Here's the one, the investment strategy asset allocation. You, which is the accountant, may provide a recommendation, a statement of opinion on how your client should distribute their available funds among different categories of investments. Now, again, you may not advise your client to make particular investments through the SMSF. So again, you can go down, build the investment strategy. Again, I prefer the data capture, take it from the client, you can build it. And there's, again, a specific corporations regulation that deals with this. Now, you may not have heard this before, and I must admit, this blew me away when I found this around about a year ago. So it's fantastic that you guys are on. Tax advice on SMSFs and other financial products. Obviously, if you're looking at, so here, you may provide tax advice on financial products, such as an interest in an SMSF and underlying investments, as long as you don't receive a benefit as a result of your client acquiring a product. So that means, again, you can't get a commission, you can charge a fee for tax advice. So again, Regulation 71294. We're going to look down here. This is important. Here we go. If you are a registered tax agent or BAS, you may provide advice as given the ordinary course of the activities, such as an agent that is reasonably regarded as a necessary part of those activities, which are covered. So here again, remember I said that section 766B 5C. For lawyers, it's 766B 5A and also 5B, which I think is fantastic. We won't worry about referral. Now, I just wanted to go through one here, and then we're going to come back and have a look at the issues. In fact, what I'll do is I'll go into my slides, because I have got a lot of this stuff built into the slides. We talked about this before. So you may provide advice on establishing, so this is going down further in that ASIC guideline, which you're going to get a copy of. You may provide advice on establishing, operating, structuring, or valuing the SMSF without a license. So again, Regulation 71295. Where you are relying on this exemption, so this is you, if your client is a retail client, which is obviously going to be the case, under Regulation 71295D, you must provide a written statement to your client that, here's the thing, you are not licensed to provide financial product advice under the Corporations Act. And secondly, they should consider taking advice from an AFS licensee before making a decision. Now, whether the client does or not is immaterial to you. You need to do that warning. So you can talk about it, but you need to have that disclaimer. And how do we know that? Because it comes up in this corporations regulation. Now, this is where I like ASIC, because I find that both ASIC and also the ATO, although quite a separate section, these days ATO is looking for anything finale. We've noticed at Abbott-Family, because we do a lot of SMSFs, they're targeting now, it's not sole purpose test, it's not Part 4A, it's gnarly. So gnarly's popping up there. So just be very careful. If you get a notice of audit or you get disclosures from audit that talk about gnarly, make sure you come to Abbott-Family so we can make a really good case. The danger is if you don't, then obviously the income is going to be taxed at a high rate, and usually they're looking at past years. Plus, it's more important the capital gains on the underlying investments is also now only taxed 45%. Anyway, just moving on from that. So anyway, let's have a look at what ASIC says. Again, this is not me. This is all a direct quote. No plagiarism, no spin. You know how the media like to spin. I don't do this. This is the truth. This comes straight from ASIC. The advice you give about establishing, operating, structuring, or valuing SMSF must not amount to an explicit or implied recommendation to establish an SMSF or to acquire or dispose of an interest. So again, that's a voluntary issue. However, we recognise that advice given to a person about the establishment of an SMSF may also carry an implicit recommendation the person acquire an interest in the SMSF. So for example, if we're setting one up, we're creating an SMSF and then remember, we create the SMSF. So there's no financial product there, but getting a member to take an interest in that SMSF, yes, that's potentially a financial product because it's superannuation interest. Again, contributing in that superannuation interest. So therefore, and this is important, you are more likely to be able to rely on the exemption when your client has already made a decision to establish the SMSF before seeking your assistance to take the next steps. For example, you may recommend the best structure for an SMSF to suit your client's situation after they made a decision to establish an SMSF. So accountants, what does that look like in practice? So the first thing is when a client comes into you and they say, look, I want to set up an SMSF, then you can go through the process of, well, if you want to do this, these are the risks, these are the issues, feel free to rip off and take like the first 4 or 5 chapters of my Guru's Guide to Self-Managed Super Fund, which lays out both the risks and also the benefits of an SMSF. You'll also find we've got a product disclosure statement, which is a really great guide, again, going through all the benefits and the risks there. Give it to the client to make sure that they have a look at it, or just send them to YouTube and give them one of my videos to have a look at. But if they've come to you, the next step is, first off, this is important, prima facie, or if you're setting one of these up structurally, all members must be trustees, or you're going to set up a corporate trustee anyway. So all members must be directors. However, in setting one of these up, you can, if someone has a special purpose, enduring power of attorney, if a member gives it to one person, then that other person can be the director on their behalf. We call it at Lightyear Docs and Abbott-Family, call them replacement directors. They're like alternate directors or successor directors. So they will take on as a successor director on our path. So for example, we could have a 4-member fund. We could have John and Sally Smith, their children, Max and also Julie. They're all members of the fund, they're all setting up. But we could have, for example, only John and also Max being the directors of the corporate trustee, because Julie, the sister of Max, has given her EPOA to Max because she's overseas or she's too busy, and Sally has given it to John because she doesn't really want to be interested in all that trustee, stuff and all that. So that's a structure. You can then go beyond, and for those of you who are going down that Abbott-Family and Lightyear Docs route, you've heard about us talking a lot about leading member funds. In a leading member fund, it's a bloodline style fund. So the only members can be bloodline. More importantly, no monies can come out of that fund, particularly from an estate planning perspective, unless it is going to be directed to bloodline. So it either comes out directly to bloodline, or if it goes through an estate, the trustee of the SMSF cannot release that money unless they're absolutely guaranteed it comes from bloodline. Again, all of that's built up in the SMSF will or the BDBN. So we've got those different structures. So we've got that, and we can set and talk about that. Okay, ASIC on contributions. Again, this is an example that's straight out of the ASIC guide. I'll only be about another 10 minutes if you can hang in there. Under the exemption, a registered tax agent may provide on any tax implication of contributions into an SMSF or other super fund. So this, it doesn't matter what it is, whether it's retail, industry, or whatever, such as a client's eligibility to make concessional or non-concessional contributions. And that's particularly important with the new rules we're still waiting to be put in place for the ability to contribute up to age 75. And more importantly, that 3-year bring forward, we have to talk about concessional caps, the bring forwards if we've got the non-concessional, and then also the ones we haven't utilised in the past for concessional, so for non-concessional. So, such as clients, for instance, a tax agent can use a client's total superannuation balance, let's say it's $1 million, to advise the client on their eligibility for the unused concessional caps carried forward and the non-concessional contributions to you to bring forward period. So again, we are right in the middle of dealing with a superannuation interest. Because doing a contribution is a superannuation interest. Now here, ASIC, not the tax office, not Grant, not the lawyers or whatever, ASIC is telling me if I'm a tax agent, which unfortunately I'm not, but I carry the same exemption because I'm working with Abbott-Family, I can go and talk about all this stuff with a client. However, so there's always a however, they cannot recommend a client make a particular level of contributions. And then, although they can advise on the maximum level of contributions can make. So for example, I can go in and say to a client, well, your general superannuation balance or total superannuation balance, which limits the amount you can put in, your age 71 years of age, once the laws are in, you can put in $330,000 of concessional contribution. You haven't made a non-concessional contribution. You haven't made a concessional contribution for the last 3 years, so you can put in like 3 years of, or 2 years of 25, one lot of 27,500. So that's the maximum amount you can put in. And then it's up to them to make a decision as to what it is. I can then advise them if it's concessional, it's tax deductible, so on and so forth. This is because the decision to make a particular level of contributions involves considerations other than tax. And I think that's important. As another example, this is fantastic. They're giving us examples on exactly what's happening. A tax agent can advise a client they will be eligible for a tax offset if they make a spousal contribution. The tax agent cannot recommend the amount of the spousal contribution. However, they may provide factual information about the spousal contribution, eligibility criteria is relevant to calculating the amount of tax offset. This may include, but it's not limited to spouse's income, blah, blah, blah. So that's contributions. I've got there, here we go. I don't think I missed one out on pensions. Just let me bounce out of here just quickly. There's a couple there for tax agents. I just wanted to show you in particular around, you can see here, this is all the stuff that we're looking at. I would strongly suggest print it off, put it on your wall so you can always do that. Our asset allocation investment strategy, as I said before, you may provide a recommendation, statement of opinion to your clients on broad asset allocation. Can you believe that? You are authorised by ASIC and the Corporations Act to tell them how much of a percentage or what brands they should have between shares, managed investment products, etc. Let's go down a little bit further. So we've got tax advice, we talked about, that's for accountants. Now we're going into tax agents. So I'm just going to go, you can see here under the exemption, this I just copied and pasted that one. Accumulation versus pension, let's see what it says there. A registered tax agent may also advise a client on the tax implications of moving their super benefits from accumulation to pension phase. Remember, I talked about that before. That is a financial product, but may not make a recommendation to a client about when to do so. For instance, a tax agent may advise a client on the tax implications of retiring at different ages. For example, age 60, giving up one form of gainful employment, such as a client being able to withdraw super benefits tax-free after a certain age, which should make it clear to the client that tax is not the only consideration in making retirement decisions. I'm going to take you through a couple of suggestions. So Christopher Coco says, in regards to setting up, do we need to get the client to sign off on the fact they already wanted to get set one up and they understand the limitations of advice? That's a really good question. So I'm going to show you what we've done on that, Chris. So that's a fantastic segue into our next session. So what I'm going to do here is, I'm just in the Lightyear Docs platform. Please forgive, it doesn't look crash hot at the moment. We're going through quite a radical change, which will be available in 6 weeks. It's so super exciting. But you can see we've got a whole lot of stuff around SMSFs there, deed of variations, investment strategies, EPOA and wills, establishments, discretionary trust, multi-generational. Now, what I'm going to do is I'm going to just choose this SMSF establishment with corporate trustee. So in the system, it's already been in, and all I'm doing is I'm relaunching our system. So that will take me into here, the SMSF establishment with corporate trustee. It puts in the system again. Sorry, this is a bit ugly looking, a bit clunky looking, but that's gone in about 4 weeks. But that doesn't mean you shouldn't be in there. So I set up the establishment. Now, this is where the rubber hits the road, and I need you to have a really good look at this. So we put in the name of the fund, that's easy. When's it going to be established? That's easy. So I'm going to establish that. It's not June, it's now September. So I'm going to establish that today, which is the 23rd. Choose the state in which the legislation applies to the fund. Because it's a trust, we need to have a look at that. But the rule against perpetuities doesn't apply to self-managed super funds. So that actually overrides the state-based trustee acts, which is important. Now, are you an accountant seeking to rely on the Corporations Regulation 71295D for a licensing exemption where a client has asked you to set up an SMSF? If so, tick the option for a client letter meeting the regulatory requirements. So what happens is if I go no, then if I'm a planner and I have to do a statement of advice, then this extra letter won't come up. But if I go yes, then that'll come up. And that's the beauty of the Lightyear Docs automation, and more importantly, that automation technology. And you'll see that really comes to the fore when we're looking at investment strategies. You can do data rectifications, fixing up prior investment strategies. I go down to the trustee. So I've got a corporate trustee, that's all fine. Now in our system, which is really important, and again, this really goes to probably much the same as the question, we'll go through that one. If we have a look for both John and Sally Smith, we don't have membership applications. What happens is if you come in later on, so let's say we've got John and Sally, they bring in Max, absolutely there's a member application, including governing rules, including tax notifications, ATO notifications of a new director, including the PDS. So we include all of that for a new member. But in this instance, the members actually become party to the original deed, which is a fairly important one from that perspective. So if we go down the track there, we've got John and Sally, the initial members. We have, in the event that there's a members meeting, to turf out the trustee, what's the voting power? So we've got a vote each with a chairman, a casting vote, or proportional votes. So if I go down that track there, what I'm going to do is just finish this document. As you can see, it doesn't take that long to set up a self-managed super fund. It's a blink of an eye. But I want to just show you exactly what you get, because it's really important for that one. Joe Walsh, Grant, will like you be templating some tax agent limitation of advice. If you want to send me an email, Joe, exactly what you're after, absolutely, we can build that. If you say no to needing a letter in LYD, can you go back later and get one? Absolutely, Kirsty. So that's a really good question. So the same way, I've just gone in, and all of our systems, wherever you do something on Lightyear Docs, you can go in and later on you can come back and relaunch. That's why people, if you've got an investment strategy, here's a bit of a hint, best system ever. Set your investment strategy up, and then what happens is, provided you've got the same sort of investment strategy next year, you just go back, relaunch, as I just did. Remember that little rocket? Relaunch it, I'm back in again. I just changed the dates and the ages because you have to put the members' ages in there as well. I relaunch and I do it. That's a good thing about the system. You want to go in, set the thing up, put it in draft, send it to the client, and then once they want to finalize it, then complete a final one, relaunch and start again. So I'm going to download the documents. Now, as with all of our documents, they come in PDF, so you can't make any changes. That's how you can ensure there's no you're not providing legal services. We will go down the track a little bit later on, once we get our new system, that if you want to do, particularly if you're doing data variations, the ability to vary discretionary trusts, which are now really open slather, much the same as SMSF. They're subject to another time, but really you should be upgrading all your discretionary trusts. You'll have the option there of having Abbott-Family do a review of the documentation. But for something like this establishment, we don't have to worry about it. So we've got the SMSF trustee, it's okay. Let's have a look here. Bingo, bango, bongo. And we've got a letter from Abbott-Family. So this is a letter from us, lawyers, to your clients on behalf of you, if that makes sense. So it's a letter from the lawyers who built the precedents to your client on behalf of us, excluding you from the financial services regime. So I want to spend a bit of time just going in and having a look at this so you know exactly why it's important. Now, important information about your self-managed super fund. Now, remember, you want to send this to them in draft first. So you send it to them in draft so they have a look. We refer to your request to establish a self-managed super fund on behalf of you and your family. In that regard, the attached SMSF trustee and governing rules are based on data provided by you to Jones Accountants. So that's obviously who's going to be the member, corporate trustee, etc. It uses current legal precedents provided by our legal firm, Abbott-Family, to ensure you have a set of rules that's strategic, modern, provides benefits to you, your family, and your bloodline, and can take up to 6 members. So if you haven't gone down the track of essentially upgrading your client's deeds, you'll find within our strategy support centre, which I won't do, but just contact us at support@lightyearsdoc.com.au. We've got an email you can send out to your clients talking about SMSF upgrades. We have attached a copy of the SMSF PDS. Now that's important. Trustees of self-managed super funds are not, they're not required to be licensed if it's a self-managed super fund, but they still have to give a product disclosure statement to their members. So we attach a copy of the SMSF PDS, which is a broad guide to the benefits and risk of holding SMSF, and we strongly advise that you should spend time in reading your PDS, as well as the trustee itself, to become acquainted with the rules of the fund that we've prepared. One of the authors of the trustee and governing rules is obviously myself, has written a handy guide to SMSF that you may want to invest in, the Guru's Guide to SMSF to further your SMSF education, although I don't think there's really many of those around anymore. But importantly, in addition, the Commission of Taxation provides a wide range of videos and guidelines at W. So you're giving them absolutely everything. Okay, Jones Accountant advice. Abbott-Family lawyers have prepared a set of governing rules for your self-managed super fund. Jones Accountants, in particular, John Jones, have facilitated this process, and it's important to note they are not financial planners nor licensed advisors and did not recommend an SMSF to you, but rather you sought the establishment of the SMSF by the firm on your behalf. Importantly, corporations regulation and also ASIC requires Jones Accountants to advise you of the following. Jones Accountants not licensed and provide financial product advice. You should consider taking advice from an AFS licensee. Should you have any queries about our advice in this letter or would like to speak to a lawyer in relation to establishing, please don't hesitate to contact us. So just jump in the chat now. If you feel, and look, this is the beauty of the Light Year Doc system. We are really driven by you. So the beauty about our system, if you have a look at everyone else, they can't make changes really quickly. We can make changes. The number of changes we've made to investment strategies is amazing. This letter was not around 6 months ago. If you feel, let our team know on the chat that we should get the trustee of the SMSF to sign off. Absolutely. All the directors of the corporate trustee to sign off. In fact, what we want to do is get the members to sign off, because remember, they're the initial members of the SMSF. If you want to do that, then absolutely let me know and we can get that letter signed off if you feel that's the case. So what do they get? They get a deed of establishment, governing rules, product disclosure, ATO trustee notification. So if we have a look through here, we've got, as I said, we're unusual from everyone else because we've got the fund members being parties to the deed. You're setting up the fund. Now, again, there's no need for a separate consent document, because it says here, by execution of this deed, the trustee signifies its consent to be appointed as the initial trustee of the fund as well as the initial members. The trustees acknowledge they read the rules of the fund, the product disclosure statement, agree to be bound for them. Again, by making the initial members a party to the deed, can you see how powerful this is? By execution of this deed, the initial members are taken to apply for membership of the fund through this deed and hereby signify their consent to be appointed as members. The initial members acknowledge they have read the rules of the fund, the product disclosure statement, agree to be bound by them. And then we talk about sole purpose tests, etc. And then obviously you've got the initial members signing off, a lot more powerful than an application, because an application can get lost. You can't lose these ones here. And then we go into the governing rules of the fund, the PDS, etc. So essentially that's what that looks like. If you want to get a sample of that, including the letter, for your review and suggestions, please feel free to give suggestions at any point in time. So to support@lightyeardocs.com.au, we'll have the sample of this exact deed. I'm going to download this. I'm going to give it to Laura, who looks after all our stuff, and Ornusa. So you'll get the ASIC guidelines today. Read them. That's absolutely crucial. As I say here, the last one, if I have a look on what to do now, and I'll just close off after that. So if I have a look at what to do now, are you a tax agent or accountant? So the first question is, if you're a tax agent or accountant, what do you want to do? Look at the two separate areas there. I've shown you that accountant and tax agents should also follow along those ones. I'd print and keep those ASIC guidelines on your desk and handy. They give you examples. They tell you exactly where the tram lines are. Read it once, read it twice, and effectively, get on top of it. If you're exempt, so what I mean by that, you do not need to do a statement of advice, but a product disclosure statement is a legal requirement. So you're actually helping out the trustee of the superannuation fund on that one. So you can use the Lightyear Docs solution. You can either do your own thing, but it's already embedded in the Lightyear Docs. For those of you who aren't using your Lightyear Docs, that SMSF establishment deed's only $99. You don't pay any extra for those add-ons there. And that's crucial. Our investment strategy is $49. You don't pay extra for add-ons there. We've got some great deals going on. If you need to have a look further at Lightyear Docs, you want me to show you around, again, just contact support@lightyeardocs.com.au. And I'm going to show you through some amazing strategies, not only SMSF, but also discretionary trust, asset protection, and particularly our fantastic estate planning suite. I'll just do some Q&As and then we'll bounce from there. Can a tax agent advise on recourse borrowing under the exemption? Absolutely. So when you go through, Nori, it's important that if someone comes to you, so the best thing is someone comes to you and says, look, I'd like to buy a property with my superannuation money. I found a property, I want to do that. Then what you'll do there is, even if they come and say, look, I'm buying a property, you can go and say, look, if you've got a self-managed super fund, you're able to utilize that money for buying property, or give them one of my videos up on my YouTube channel on buying property through a self-managed superannuation fund. Again, you'll go through that process and you'll advise them on the tax consequences. You'll advise them if you have to do that, you have to, and it's not only that, but it's also SIS compliance. So you need to have a holding trust. The borrowing has to be for single acquirable asset, blah, blah, blah. When it goes in, once you've fully paid off, it can then be transferred over stamp duty free into the SMSF. So absolutely you can do that. Have a good look, Nori, when you go through, have a look at that guideline from the Commissioner, that's what I mean, from ASIC, and have a look at what they detail in relation to limited recourse borrowings. What happens if you're both an accountant and registered tax agent? Well, you've got the best of all worlds, haven't you? Because you can use that accounting exemption, remember the 71295D, but you've also got all the tax agent's exemption as well. So if you're both, you're living in a grand old thing. Can SMSF deed signed by DocuSign? Yeah, generally, it depends. So there's two things. You could under usually the state acts as well, because it's a trust. So my preference is to get it wet sign, but because it's governed by Commonwealth law, then you can sign it by wet signing if you want. John, if I currently have a limited license, can I terminate the limited license ASAP and use the exemption of the above mentioned SMSF? So, John, we've had a lot of people, because of the rising costs for the limited license, bounced out of there. And then as long as you understand exactly and follow to the letter, sit within the ASIC guidelines. Remember, who's the regulator? Is it the tax office? No. Is it your local lawyer? No. It's the ASIC. And again, follow the ASIC guidelines in there. So again, I would go in and do that. Grant, did anything come with setting up a state planning association? Oh, absolutely. So Steve, thanks for that. With that one, I'll just show you another little thing. I'll just spend a couple of minutes on this one, if that's okay with you, Steve, just to go through. I'll just change my background. You can see here, you can see there the Succession, Asset Protection and Estate Planning Advisors Association. From that perspective is, and if I have a look, I think I've got it up here. Let me just bounce out of there. I'm sorry, let me just go up and I'll just put here, just give me a second, guys. Okay, so I'm just going to share my screen again for you. And then, so if you have a look here, so we've set up an association. I don't know what, okay, so again, this is only in a draft form, so that's okay. Proceed to SEPEPA. Again, this is in draft. We're setting up a bank account tomorrow, so we'll be able to take on members. So just watch out for this. We've set up succession, asset protection, estate planning advisors. We already have had over 110 financial planners, accountants, tax agents, and even lawyers going through our specialist accreditation course. So we will be launching SMSF coming up in late October. That'll be launched generally, where all those people who've gone through and done the course and successfully completed it will be certified as SMSF advisors, so succession, asset protection and estate planning advisors. As I said, we've done the accreditation. We've got another one coming up in early November, which will be very exciting for that one. So hopefully that answers your question, Steve. So watch out for that one. Troy Finesse, can you confirm if your letters claiming exemption have been challenged by ASIC and passed the test? Would like to cancel my limited license. Again, Troy, we haven't put it past. All I've done is simply taken what is from the ASIC exemption there. More importantly, if you want, you can contact ASIC. All we've done is I've just simply gone in and then I've gone through exactly what ASIC has said in terms of that issue here, where you're relying on this exemption. If your client's a retail client, you must provide a letter or a statement. You're not licensed to provide advice. So that comes from our letter. Now, I've just done that because it's automated. If you want, you can actually record it, put in notes or whatever, and just as long as you go through that issue, then you can rely on that. Again, this is for accountants, this is the key section here. This is the key section here, so have a look at that. Anyway, hopefully you got a lot, well, I know you got a lot out of that. If you want anything, support at lightyeardocs.com.au. If you'd like to go through our whole suite, particularly for those you're doing a lot of investment strategies, you've got trust companies, want to do asset protection, estate planning, let me show you through. That'd be fantastic and get you on board. Anyway, it's Grant Abbott from Lightyear Docs and Abbott-Morley signing off.